Air Canada stock has been on a declining trend, losing over 13% of its value in the past week alone. As the largest airline in Canada by fleet size and number of passengers, Air Canada has a struggle during this recent economic downturn due to the pandemic. In this video, we'll review how Air Canada is navigating through these difficult times, how it survived the past financial crisis, and the prospects for Air Canada and its stock. I'll also share my prediction of Air Canada stock and whether it will fall below $10 and discuss my investment strategy when it comes to Air Canada. Watch this video until the end and let me know what you think. Air Canada stock fell from a record high of $52.70 at the start of 2020 to a multi-year low of $9.26 in March. The huge decline in the stock price, coupled with Warren Buffett's decision to sell his entire stake in the 4 major US airlines, led many investors fearful. Nonetheless, Air Canada stocks grew back up to over $23 by early June, but has since lost much of its gain. Air Canada provides airline transportation services and engages in full-service airline, scheduled passenger and cargo services, serving more than 200 airports on 6 continents. It operates flights in Canada, the US, Latin America, Europe, Australia, and Asia. The company was founded on April 11, 1936 and is headquartered in St. Laurent, Canada. Prior to pandemic, Air Canada has been a phenomenal business to invest in. Looking at the performance of Air Canada stock, you'll see that the shares of Air Canada rose 36 times in value in the prior decade between 2010 to 2020. But given the impact of pandemic on the economy and airline travels, the company's stock has fallen over 70% in the last 10 months. The stock is now traded at under $15 most recently. The future of air travels remains unknown as the pandemic has significant economic impacts, including on businesses and consumer spending, which may in turn significantly impact demand for travel. That said, if you look back at the 2008 financial crisis, you'll start to see some similarities. Between June of 2008 to end of 2009, Air Canada stock lost over 85% of its value. Nonetheless, it survived the difficult times and rewarded its patient investors as shares rose by over 817% within the next 5 years between 2010 and 2015. A question that many investors and those interested in buying Air Canada stock are asking is how the company is doing during these difficult times when it comes to liquidity and the cash available. Well, it's not a surprise that the company is loss-making at this time. In fact, last quarter, Air Canada lost $1.7 billion. The quarter before, it posted a $1.1 billion loss, and this upcoming quarter, it is projected to lose another $1 billion. That said, the company has worked on financing and raising capital to support its costs. As a result of various financing activities, the unrestricted liquidity for the company has now amounted to just over $9 billion, with an excess cash amounted to $6.8 billion as of end of June 2020. The company is also adopting aggressive cost reduction and capital reduction programs. Air Canada initiated a company-wide cost reduction and a capital reduction and deferral program as a result of the pandemic, which has now reached approximately $1.3 billion, increased from an initial target of saving $500 million. Some of this cost reduction has become possible by cutting jobs. In fact, according to International Air Transport Association, IATA, airline carriers worldwide have slashed about 35% of their combined workforces since the start of the pandemic. In Canada alone, this has translated into tens of thousands of temporary layoffs at Air Canada, Air Transat, and WestJet airlines, as well as some permanent cutbacks. Air Canada's cost reduction measures have shown to be effective, as the second quarter 2020 operating expenses decreased $2.4 billion or 64% from the same quarter in 2019, excluding depreciation, amortization, and special items. What's more, Air Canada continues to seek opportunities to preserve cash. The tables shown here provide an overview of passenger revenue by geographic region for the second quarter of 2020 and the second quarter of 2019, as well as a year-over-year percentage changes in passengers revenue and operating statistics for the second quarter of 2020 versus the second quarter of 2019. You'll notice that Air Canada had passenger revenues of $207 million in the second quarter of 2020 and $3.4 billion in the first 6 months of 2020, decreasing 95.2% and 58.1% respectively from the same periods in 2019. Looking at Air Canada's cargo revenue by geographic region for the periods indicated, we'll notice positive signs. In fact, Air Canada's cargo revenue of $269 million in the second quarter of 2020 and its cargo revenue of $418 million in the first 6 months of 2020 increased 52.5% and 18.4% respectively from the same period in 2019. Given the roughly $9 billion liquidity that Air Canada has, it is projected that it will be able to navigate through these difficult times for at least about 18 more months at this current cash burn rate. Reviewing Air Canada's second quarter 2020 report shows that Air Canada reduced its second quarter 2020 capacity by 92% compared to the second quarter of 2019 and plans to reduce its third quarter 2020 capacity by approximately 80% compared to the third quarter of 2019. The airline will continue to dynamically adjust capacity and take other measures as required to adjust for the demand, including as a result of health warnings, travel restrictions, border closures, and passenger demand. Overall, the future looks green for Air Canada and other airline stocks. There's also a possibility that it can take years before the airline industry can recover and reach its pre-pandemic levels. Air Canada, along with the rest of the global airline industry, is facing a severe and abrupt decline in passenger travels and a corresponding decline in the revenue as a result of the pandemic and the travel restriction imposed in many countries around the world, and particularly in Canada as well as the United States. The impact of the pandemic began to be felt in traffic and sales figures commencing in early March 2020. These impacts include drastic declines in earnings and cash from operations. The expectation is for continuing considerable negative impact to cash flows and Air Canada's liquidity position, including after considering the mitigation responses. That said, earlier this month, calls for a government bailout grew louder, with two labor groups representing Canadian pilots asking Ottawa to offer low-interest loans of $7 billion to the country's airlines in a bid to keep the industry afloat. Such a bailout wouldn't be surprising. The government has stepped in and rescued the sector before. It is, after all, one of the largest private employers in Canada. Personally, I believe that patient investors will be rewarded if they keep a close eye on Air Canada's business recovery and try to pick up more shares of Air Canada at enticing levels. My strategy has been to take advantage of dollar cost averaging as Air Canada stock price has declined, and in fact over the past week I've definitely added to my position in Air Canada. While I doubt that Air Canada's stock price will fall below $10, I do definitely welcome that, and if it happens, I would definitely more aggressively add to my position in Air Canada stock. Over the past week, I have bought 11 new shares of Air Canada with an average purchase price of $15.36 Canadian dollars. This brings my total shares in Air Canada to 27 shares with a cost basis of $15.92 per share, showing an overall return of negative 7.46%. In my opinion, with the cost reduction measures that Air Canada has taken, its success in financing and raising capital, and leaner operations, it can survive this unprecedented time and would be a good long-term investment option for patient investors. As long as you believe that the largest airline in Canada is not going out of business, it may well pay off to be greedy now when almost every other investor is fearful of this stock. Just be sure to do your own research before you invest in Air Canada or any other stock that we talk about here on Momentum channel. Air Canada will present its third quarter 2020 results on Monday, November 9, 2020, and we'll be sure to review those results and what it means to investors in a future video on Momentum channel. So be sure to follow us for more in-depth stock analysis videos. It's worth mentioning that in the past 4 quarterly reports, Air Canada had one positive surprise in its latest earnings per share in last quarter reported, but it had 3 negative surprises in the previous 3 quarters. Lastly, before we end this video, here's a quick look at my active investing portfolio with Wealthsimple Trade, showing a negative 3.3% return since last week, which is not as bad as the negative 5.5% return for the S&P 500 index. What do you think of Air Canada and its stock? Are you currently invested in Air Canada? Do you have any plan to add to your shares or perhaps sell your shares? Let me know in the comment section down below. There you have it, folks. I hope you found this video beneficial and you gained something of value from it. If you did, please be sure to give it a thumbs up and share it with someone who might benefit from this video as well. And don't forget to subscribe to Momentum channel. Here on Momentum, we post weekly videos about the stock market investing and financial freedom. Hope to see you next time.